All right, quickly. So this is advanced liquidity concept, right? So in my previous video, I mentioned that we have type A liquidity concept and type B liquidity concept. And I show type A liquidity concept in this manner, all right? That you have the market. So I'm going to use an example of an uptrend. The market is pushing to the upside, breaking structure, all right? So this is advanced liquidity concept in the sense that instead of price going up, all right, to break this structure that we have here, price came down to clear this low here, all right? And the mistake that most traders will make is to um, tag this level as their change of character, but instead of market coming to the downside, price push to the upside. Okay, so this is the type A liquidity concept. All right, this is the type A liquidity concept. This is how it looks. Let me put it here. So for type A liquidity concept, we have two break of structures. Okay, we have two break of structures, and the first break of structure is what I called minor break of structure, and then the second break of structure is what I called major break of structure. And here, where traders would have tagged as their change of character, is where I called the sweep of liquidity, because those traders will be liquidated. All right, and price, while it's pushing up to take out this high here, is going to give series of higher highs and higher lows, signifying that it wants to come down. So these traders that believe that this is a change of character, they will try to short the market, and then price will keep taking them out. Okay, so this is for type A liquidity concept. Very simple and very easy. You can easily spot this in the market. All right, let me quickly show you an example here. Maybe I'll just show one or two examples. Look at this. This is what our minor break of structure. Okay, and why other traders will mark this as their change of character. Can you see that? Is going to be what? Liquidity sweep. Okay, liquidity sweep. And then here is going to be the major break of structure. Is going to be the major break of structure. So I have a system whereby, or a strategy whereby, helps me to enter the market from this region here, from this region. So I can actually ride the market from here up to this level where this high is taken out. Okay, so see more example here. This is another example here. We have another example here. All right, this is minor break of structure. So you can actually have more than one minor break of structure. Okay, minor break of structure, and this is the major break of structure here, up here. Can you see that? That's the major break of structure. So for me, I don't call a market to change direction until my when the low of my type A liquidity or type B liquidity has been taken out. Okay, so instead of calling this a change of character, I call it what? Liquidity sweep. So when do I confirm that a trend has changed? When price take out this low. That's the low that caused the major break of structure. So this is when I have a change of character or market shifts in the market. Okay, now, but the focus for this video, I've actually done series of videos that explain and identify this type A liquidity concept. But for today's video, our focus is on the type B liquidity concept. So let me show you the type B liquidity concept. So the reason why I call this an advanced class is because it is actually a bit complex, but I'm going to break it down for you to understand. Now, for type B liquidity concept is that using an uptrend, price comes here, all right, and instead of price coming up here to take out this high. It's going to fake an high here, okay? And this place will be a level where the traders thinks that price is going to push to the upside because already the trend is bullish. So they believe that because the trend is bullish, this low here should be very strong. Therefore, we should have an entry here. And mind you, in lower time frame, there can actually be a fractal confirmation that price is going to push to the upside. And then what will happen is that price will take out this low. That's why it is called liquidity. Okay. Price will take out this low and then push to the upside to take out this high that we have here. This is the overall high. So type B liquidity is that liquidity that has multiple break of structures. Okay. So this is a break of structure. This one is a break of structure, which maybe I can call my minor break of structure. Okay. And this is the major break of structure. All right. And if you look at my chart, most of the time I don't name this as minor. I just do the overall naming of major break of structure. So this is the type A liquidity, type B liquidity concept. All right. So a lot of liquidity has been grabbed here. Okay, has been grabbed here, and a lot too has been grabbed here, because some traders will now think now that since this low didn't hold, that market is now bearish. You get the concept, especially for those that trade breakout strategies. They might think that since price break below this low, that we are now in a bearish trend. But what happens? Price will push to the upside, take out this region where they might be thinking of selling from, maybe from an order block here, seeing that this high might hold or this high is protecting this high here. And what will the market do? The market will take out this high and this high. So here is a multiple liquidity grab. All right, this the first one, the first liquidity that was taken out. This is the second one that was taken out, and this is the third one. Okay, so let me show you one example here, because this is not actually the focus of today's class, but it's very good that I explain that because it's part of it. Look at the market here. Look at what the market do. Price, instead of price taking out this high as a break of structure, what happens? It comes to the downside. All right, taking out this low for some people that want to buy from that level. Okay, and then what happened after that? When this high, this double top was formed, some traders believe that it's going to hold, and you can see that they actually sold here. You can see that price actually behaved as if it was going to hold. Indeed, look at it here. If you were in this market before all this happened, you would have thought that the price is going to hold here, because this is a very strong rejection followed by this bearish candle and this bearish candle. You would have thought that price is going to come down, and especially when this evening star was formed. Okay, you would have thought that, okay, this is a manipulation, right, and that price will begin to fall, but it just dropped for a few hours and then pushed to the upside. All right, so this is the first liquidity grab. This is the second liquidity grab. So what happens here is that price behave as if it's going to come up and take out this high, but it didn't do that. What happened was it pushed up, came down, all right, take out this low, and then push to the upside to take out this high that we have here. So this is our major break of structure. Can you see that? Overall, and this is the what? Minor break of structure. So this is our type B liquidity concept. Okay. And like I said, I do not necessarily name this. I just do this major only. Okay. Now, I have concept of trading the type A liquidity concept, and I also have concept, or the strategy rather. I have the strategy of trading the type A liquidity concept, and I also have the strategy of trading the type B liquidity concept, which is this one. that I just explained now. All right. So I'm going to be showing you some models or some ways, different ways or cases by which type B liquidity prints in the market. This is very, very simple, right? So, so there are different cases or patterns by which this type B liquidity prints. So this kind of liquidity concept, which is the type A and the type B, they are not fixed concept that does not allow the market to move in multiple ways. All right, that is why it is an advanced liquidity concept. For example, if you are talking about trend line liquidity concept, all right, we all know um, what a trend line is and how a trend line should be. Okay, even a newbie can recognize, identify, or draw a trend line. All right, but for this, for example, for example, you know, let's say price is breaking structure to the upside. Okay, everybody everybody can see that this is a very good trend line. Okay, and if price eventually come to take out this low and this low, that means the liquidity here has been taken out. All right, this is very clear and this is very easy and simple and very simple for beginner traders. Okay, but these are what you are most likely going to see in the market, and if you are unable to identify it, that means you will not know what the market is doing at that point. And also, when you have a ranging market, all right, so that means there is this the buy side liquidity, this the sell side liquidity. So there is liquidity up and there's liquidity down. All these ones are basic beginners liquidity concept because it can be spotted, everybody can see it, and the market does not have the liberty to move different from this pattern. It is fixed. All right, but for this type A and type B, the market has a lot of ways, freedom by which it can actually print its own liquidity concept for that market at that time. So that is quite complex, and for you to be able to identify it means that you have the knowledge of what I'm trying to explain. Okay, so we are not talking about trend line liquidity concept and the ranging you know market liquidity concept and all those basic ones. We are talking about the advanced here, type A and type B. Now for the type B now, okay, I want to give you two um patterns by which it can move. All right, of course this is not the limited patterns. I can draw many patterns, maybe 4, 5, 6, or 8 by which you can move. But these two I'm about to draw is going to help you to identify the rest, because you just have to understand the mindset behind the movement of the market when it is creating the inducement or the liquidity um, in the market for traders to come in and then induce them. Okay, so now the focus is on type B. So now what the market is doing, let's say the market is in a downtrend. All right, the market is in a downtrend. Okay, let's say we have a high that takes out a low. Okay, and then we have another high being printed that takes out a low. All these are ordinary break of structures. Like when market took out this low, that's ordinary break of structure, ordinary break of structure. Now when price comes up a bit, let's say let's have another break of structure. When this was taken out, this is another break of structure. Okay, then if the order flow of the market increase a bit to the upside, all right, and then there is um a close below this low here, which should have signified a break of structure, but instead price come above here and close above this high. Okay, now some traders will mark this region as what? As their change of character. But instead, it is not a change of character. It is a sweep of liquidity. All right, because you don't confirm that a trend has changed just by the market taking out the previous high or the previous low. All right. So what the market will do is that for this type B that we are talking about is that it's going to push down a bit. Okay, it's going to push down a bit. All right, and take out this high. Now, when it takes out this high, for some people that use double break of structure to confirm that a market has changed, right? They will fall to this type B liquidity concept. They will be liquidated. Now, instead of the market pushing to the upside, what will it do? It's going to come down and take out this low, take out this low. That is why I defined type B liquidity concept as the liquidity concept that has more than one break of structure or multiple break of structures. Okay, it is different from type B, so it's going to close. Now, for you as a trader, where do you come in to make an entry? Now, this is the multiple or double break of structure. This is a break of structure, and this is a break of structure. Okay, now where are we looking for entry as um the a trader that understand this type B liquidity concept? We are looking for entry at the last high or the recent high that caused this break of structure that we have here, and this is the high here. So the other block that caused this change of that caused this break of structure is where our entry will be. Our entry will be here. Okay, so we have this liquidity sweep here. Okay, and this will be an inducement. Why some traders will mark this liquidity sweep as change of character and break of structure, and then they will not be looking to buy the market. Okay, so inducement, and here will now be our what? Our major break of structure. Okay, this will now be our major break of structure. Can you see that this pattern, right, is the same thing with this one? This is for uptrend, this is for downtrend. Okay, can you see that? So this is where we'll be looking at taking an entry. All right, the nearest high that caused this break of structure, the other block of that high from here. Okay, and then we take our entry there and we look to close at this low here, or maybe at the nearest order flow if we have an order flow here. All right, this is going to give you a very, very winning rate and very good reward, like very high reward. All right, so this is one of the ways by which you can make your entries. Okay, now another way is that while we have price pushing to the downside, I'm using a downtrend now. All right, pushing to the downside, and then we have, instead of having a break of structure, we might have something like um equal lows, maybe with a week, like this um price here. We take out this low with a week, so it can be a sweep of liquidity or equal lows, whichever one. For this one, it is a break of structure. You understand? It is a break of structure, and that is why some traders will name this as their change of character. Do you understand? But this one, they are not going to name this high as their change of character because this is not a break of structure. For this one, it is a break of structure. Okay, but this is not a break of structure. All right, this is going to be equal lows. All right, either with a wick or with a body, but it's going to be very visible that it is equal lows. And what will the market do? The market will come here and close and take out this high here, which will now be a sweep of liquidity. Do you get? And when that happens, the market will come down, all right, to create that inducement. Okay, as though it's going to take out this low, but it's going to come up. It's not going to take out this high like it did here. You can see that when it came down, it took out this high. But in this case, it's not going to take out this high. It's just going to come up. You understand? Leaving out those people that have the understanding of what I'm teaching now, but they don't know how to read the market. All right. So they will be looking at making an entry here, but the market is going to leave them behind, then come down to take out this low and this low and cause, a break of structure. And this is what we have. So this is going to be equal lows. All right. Sweep of liquidity. Okay. Sweep of liquidity. And this is going to be double break of structure or multiple break of structure. I'm going to show an example of multiple break of structure where the break of structure is more than 2. So this is my what? This is my um, major break of structure. So usually I leave this one out. Now, where do we look for an entry? We look for an entry at this. Remember, I told you that your entry should be at the nearest high that caused the break of structure. Where is the nearest high? We have this high and we have this high. Which one is near to the break of structure? This high. The other block that is around the high that caused this major break of structure is where we'll be looking at making an entry. Okay, so we'll just wait patiently, or we set our orders for price to tap into it and then come to the downside. Okay, so now let me give you an example of where we have multiple break of structures that is more than 2. Okay, and then I will show you 2 examples or multiple examples on the chart. So like I said, we have, price pushing to the downside, in a descending high and lows. Okay, and for this case, let's say we have um equal we can either have equal or something like this. Okay, so for here we have a break of structure. For here we have equal lows, but for here it is neither break of structure nor equal lows. So the market comes, take out this high. When it take out this high, it comes to the downside as if it wants to take out this low and this low, all right, to validate our type B liquidity concept. But instead of that, it take out this high. Now, when this high was taken out, it comes to the downside, all right, create another high, which is lower than this high, okay, and then take out this. Now, when it takes out this, everybody is going to expect that price is now going to come to the downside to take out this. But instead of that, it's going to take out this high again, but it's going to leave this and then drop to the downside. Now you can see that this is multiple, break of structures, multiple break of structures. This is more than 2. This is actually 3 or 4. 3, yes. All right. So what is important is not to memorize the pattern by which the market is going to move for type B, but to understand the concept of his moving. Do you get what I'm trying to say now? To understand the concept of his moving and not to enter early. All right. You should wait for market to do what it wants to do. All right. To maneuver in the way that it wants to maneuver, because when you let the market do that, all right, you've already seen that the market is printing type B liquidity concept, and because it has so many rooms for it to move, it can move in so many ways for as long as it wants. All you are waiting for is for the swing low to be taken out, for this case, which is a downtrend, for the swing low to be taken out. As soon as your swing low is taken out, that's the only thing you are waiting for. As long as you've been able to identify that, okay, this is type B liquidity concept. All right, look at it from here. From here, we have a break of structure. Okay, here we have equal lows. Here it is neither break of structure or equal lows. Okay, you can see it. And I explained to you that for people who trade double break of structure to confirm that the market is now going to the upside, right? This is when they will have hard time in the market. They won't know that what the market is printing at the moment is type B liquidity concept. Okay, so so for you as a trader that understand this concept or learning this concept, okay, all you have to do is just to wait and cross your hand for the market to take out the swing low. As long or as soon as the market take out the swing low, then you go into action. All right, look for the nearest high that took out this low, but that high must not be a consolidating high. You get what I mean by that? It must not be a ranging high. It must be a visible high. If you check my market structure, my first or second video, I explained that. All right, it must be a visible high, that is visible to the highs, that is visible to you, like here. All right, and then you mark the other block that caused this break of structure to happen. All right, and then you set your sell limit there. And what do you have to do? You just have to wait for market to push to that other block, and then you take your TP. There are two ways to take your TP. You should look for this push that triggers your entry. You should look for the um, order flow, for the first order flow that the market creates. All right, I also have videos on order flow. You can go see it to get this concept. You should look for the order flow, and then you can look to take your TP from that order flow, right? It's going to be around 60% Fibonacci. That's the discount level for this case. All right, it's going to be below the 50 um, Fibonacci level. All right, probably around this area. Okay, or around this low, at this swing low. That's where you take your TP. So you are not trying to make an entry when the market is trying to do its thing, liquidating and inducing traders. You are not trying to make an entry from all this level. You are waiting for this swing low to be taken out, and then you look at where is the recent high. Like I said, the high that you are picking should not be a range, because when market is coming to take out this low, it's not going to drop like this, right? It's going to move in descending highs and descending lows like this. Okay, so all you have to look for is the last high. Do you get the concept? Is the last high. If this is the last high, you use it. If this is the last high, you use it. Okay, like I said, visible last high that caused this break of structure, not the extreme high. So if I have another high here, let's say this is another high, that means I will use this. But let's say this is how the market drops the downside, this is the one I will use. Okay, now what I'm trying to say that you should not do is, let's say here, let's say we have an high here, okay, and the market drops to this level, and the market now starts consolidating like this. Okay, what I'm saying is you shouldn't use this as your high. Let's say price now came and do this. So this is what I'm saying. You shouldn't use this as your high, because this is a consolidation. This is the high you should use. It has to be a visible high that you don't have to convince yourself and cajole yourself believing that this is an high. Like the first time you look at the chart, you will see that this is actually a visible high. All right, so don't use something like this that is a consolidation. All right, so I've shown you three patterns for type B liquidity concept. All right, if I had this, that would be four. So let's check an example now. Let's see um some example. Let's see some example. All right, so this is type B liquidity concept, and like I said, this is what I use to confirm my market shift. So you can see that we have a change of character here. That means market is now to the downside. All right, so so as you can see, after that we have a pullback All right. And this pullback, let's check if it is equal lows or a break of. All right. This seems like a break of structure, but I'm not really concerned about this. Right. So um, we have this was broken. All right. So this, we can call this a sweep of liquidity. All right. When we call that a sweep of liquidity, then we have this break. The swing low was broken, okay, which is our major break of structure now. And now we have this low, okay, but this low, when this high was creating itself, right, it didn't take out this high here. Can you see that? So this is not an authentic type B liquidity concept, okay. So let's look at the downside, what the market is doing. So after this, we have a sweep of liquidity here. We have a sweep of liquidity here. Okay. Now for this one, it is not equal lows, but a break of structure. Okay, it is a break of structure. So ordinary break of structure, OBOS. It's like the first example I gave here at this point. Okay, at this point, break of structure. Then what? Liquidity sweep. That's exactly what is happening here. Liquidity sweep. All right. Price came down, and what happens? This high was taken out again. So traders were induced here. Do you get the point now? Traders were induced here. So those people who have marked here as change of character, now they are about to be taken out. Why other traders who are trying to sell from this high, thinking it will be double top, they've been taken out here also. Okay, so this is the inducement. Okay, and this is the low that created this inducement, which is what we have here. Let me show you here. Can you see it? That it was eventually taken out. So for type B liquidity, like I said, it is advanced. It has a lot of places for it to liquidate traders. You can see they were taken out here. Okay, they were taken out here. So let's put liquidity sweep there. Let me make this straight a bit. Okay, so now what are we waiting for? We are waiting for price to what? To come down. If price come down and take out this low, look at it. Please look at it. If price come down and take out this low, what are we going to have? We are going to have what? Major break of structure. I could have titled this minor break of structure. But like I said, for type B, I do not like. Can you see it? Break of structure, break of structure, break of structure, break of structure. This is the major break of structure. That's for the swing low. Can you see this? So I don't really call it minor break of structure. It is only when I'm doing type A, that's when I call it minor break of structure. So I just use liquidity sweep in this video for it. Okay. So now you can see that we have a high here, right? Now, if price take out this low, like I said, we should look for the nearest high. Look for the nearest high that took out this low. When you look for that nearest high, around that nearest high or inside that nearest high, you are going to see an order block. And what can you see here? This is an order block. This is another block. I also have videos on order block. So if you don't know how to identify or pick your order block, please watch it. This is an order block. But like I said, you should not be looking at taking an entry now. All right, because the swing low has not been taken out. because price can come up and take out this high, form another new high that has another block, and then come and take out this. So it will now be multiple break of structures. Do you get? Like in this case, where we have how many break of structure? 1, 2, 3, 4. Do you get the concept now? Because I said that type B liquidity is advanced liquidity concept, and market has too much freedom to move in a way that it likes to induce and to create that liquidity. Okay, to take out traders, to liquidate them. All right. So these are our potential areas where we are going to make decision from if price take out this swing low that we have here. All right. This is where we'll be looking at shorting the market to the downside. Do you get? To the downside from where the market pushed to the upside? And like I said, you can look for the order flow, the very first order flow before the price get to this point. Now, let me show you the last one or another example on let's check Euro USD. Let's check Euro USD. Let's check Euro USD. All right. So all of this, I'm doing it on 4 hours time frame. All right. So now you can see, let me show you something here if you are going to see it. I don't know if you can see the type A liquidity and the type, excuse me, the type B liquidity concept here. I don't know if you can see it, the type B liquidity concept. Look at it. Look at it. This is the major break of structure. Price did as if it wants to come up here and cause a break of structure. Then it comes down to cause this liquidity sweep. Remember that the first diagram I draw, okay? And then what happens? Push to the upside to take out this high here. All right, which, like I said, I don't usually name it. Is either you call it liquidity sweep or minor break of structure, but I just leave it out. I don't name it. Okay, so that's an overall. All right, now let me give you this tip. When the market is moving, there is a external movement and internal movement. The internal movement also has the capacity to change the direction of the market. It's like a seed that grows and begin to gain ground and gain strength as time goes on. But at first, it was a small seed. Okay, so here we have type A liquidity concept. Look at it. This is a minor break of structure, and then this is a major break of structure. All right, major break of structure. And like I said, my own change of character happens when my type A liquidity is taken out. So this is where I mark as my market shift structure or change of character. All right, this is my minor break of structure. So this is what it is for me. Okay, now explaining the type B liquidity concept, I just want you to see this you know, type B liquidity concept, the overall type B liquidity concept of the market. Okay, so now this is the internal change of structure. Okay, until when this law is taken out, that will be the overall or the external change of structure. But internally, the market has changed structure. Do you get the concept? Aha. So I use type A liquidity and type B liquidity to confirm my change of character or market shift, not only externally but also internally. You can see that this is the internally type A liquidity concept inside type B. Okay, so we are looking for type B now. So now it is bearish. The market is what? Printing descending highs and lows. This is descending high, descending low, descending high, descending low, descending high, descending low. Can you see that it was taking out this descending high? Can you see this is equal lows? Remember one of the diagrams I drew, equal lows. Maybe this low not perfect. What happens? This high was taken out. That's the first sweep of liquidity. So inside a type B liquidity concept, there are many liquidities in that system that the market can create to induce traders. So it's not limited. You understand? So you should have that in mind. Then what happens? The market came down pretending as if it's going to take out this low and push to the upside. So this is what you can call either your sweep of liquidity or minor break of structure, but let's just call it minor break of structure. And this will now be the swing low that is taken out, which we can now call what? The major break of structure. Do you get the concept? The major break of structure. All right. Now, where is our high? Remember that our entry is after the swing low has been taken out, or it can either swing low or swing high, depending on the trend of the market. All right, is a recent high that caused or that is nearer to what? To the major break of structure. This is a high. Now, this high, does this high have other block? No. So I'm on 4 hours. So when I want to trade this, I trade this on 4 hours. If I want to trade it on 15-minute time frame or 30 minutes, I stay on that 30 minutes. I don't switch. Okay. If you look at this is where we have an authentic order block. You can see that this bearish candle engulfs this green candle. So this is where we are going to be interested in taking or trading the market. So your stuff should end at the first candle, which is the green candle here. You will always have one big candle and one small candle. You understand? Okay, so you take your entry from here. All right, you can also use my fractal confirmation. And if you want to take your entry directly, you can simply take your entry directly. Immediately it gets to this zone. Of course, your stop loss will be above here, not above the wick, but above the body. All right, and like I said, this is the first order flow. After this low has been taken out and then price is pushing to the upside. Do you get? From the down, this is the first order flow. So your first TP can be this low. Can you see? That's what I was explaining. And this is already 1:4.5. That's close to 1:5. Or this low, or this low. Those are the two places you can actually take your TP. Can you see? And this is what? Let me see. I want to see the risk to reward ratio at that. This is 1:7, exactly 1:7. That means if you risk 1K, you're going to make 7K. If you risk 2K, you're going to make 1.4, right? So if you risk 5K, you're going to make 35K, all right? So this is a concept. And you see, very easy and very simple, right? So you might not get the whole concept and understanding of this um, liquidity at this first view of the video. You might have to see it multiple times for you to actually understand it so that you can trade it correctly and effectively. All right. So thank you for watching. I would like you to like this video, subscribe, comment, and share it with your friends that you think might need this understanding to trade um, this concept in the financial market. So thank you. God bless.